Good evening and thanks for joining us. The top stories today. The federal government tackles virus relief fraud. Some alleged fraudsters spent Paycheck Protection Program money on luxury products like motorcycles and sports cars. American Airlines wants another government bailout, but is it fair to burden the taxpayer? We have analysis. The US announces a $1 billion plan to study AI and quantum computing. This is to keep the US competitive in the global market. And Trump advisor Larry Kudlow says the administration is planning for more tax cuts and deregulation. This is to help boost investment and bring back jobs. The Justice Department is charging a man with defrauding over $800,000 from the Paycheck Protection Program. He's not the only one. NTD's Phil Zoe talked to an expert who says there could be thousands more cases like this.
The Department of Justice is cracking down on people who are mishandling funds from the Payment Protection Program, or PPP loans. A man in Minnesota was charged with fraud by the DOJ. He received over $800,000 from PPP loans and allegedly spent some of the money on a new Harley-Davidson motorcycle and golfing excursions. Another man in Florida received almost $4 million from PPP loans. Within days of getting the funds, he bought a Lamborghini sports car for himself. We spoke to fraud expert Frank McKenna. He says he's very concerned about the PPP program. He thinks thousands of more cases will come up.
The Department of Justice is just scraping the tip of the iceberg. If there's going to be continued fallout for the loan program, we'll see thousands and thousands of these cases.
Frank says scamming the government can have very serious consequences.
Defrauding the government during a pandemic is a very stupid thing to do. You know, if you defraud the SBA, you could be looking at $1 million fine and do up to 30 years in prison. So this is no joke.
He says because the government was rushing funds to businesses that were actually in need, it made it easier for scammers to take advantage.
Because the government needed to get these funds out to small businesses and people in great need very quickly. Fortunately, that made it very easy for fraudsters and con artists and scammers to infiltrate the system. So it's very easy.
As of last month, over 5 million PPP loans have been approved at over $500 billion. Phil Zoe, NTD News.
So there are people who got government aid when they shouldn't have, but there also seem to be some who got it who didn't get it when they should. The IRS says 800,000 people may have accidentally thrown away their direct stimulus payments. The agency told New England tax professionals the news during a recent online meeting. The IRS sent about 800,000 letters to taxpayers who didn't activate their stimulus payment debit cards. IRS officials think some people may have thrown the card away, thinking it was junk mail. The IRS says of the 4 million people who received their stimulus payment via debit card, 20% never activated it. The IRS is allowing those who lost the debit card to apply for a new one. And I would say that American Airlines would be grateful for that money. It's looking for another government bailout. It says it'll need to cut 40,000 people without it. White House Chief of Staff Mark Meadows says the president might have to take executive action to avoid the layoffs. That's if Congress fails to agree on a new stimulus package. American received $25 billion in payroll aid under the CARES Act. That allowed the airline to protect their jobs through to October, and now the industry wants another $25 billion to keep workers employed through next March. That's when they hope travel demand will have picked up. Meadows is in contact with officials from American, United, and Delta Airlines about the matter. The Flight Attendants Union says congressional action is ultimately needed to save jobs. But is there a limit to the seemingly endless bailouts? And is the taxpayer ultimately responsible for private companies? I asked Joel Griffin, research fellow at the Institute for Economic Freedom. It's part of the Heritage Foundation.
Yeah, we cannot continue bailing out businesses across the board. I understand a lot of people in the airline industry especially are suffering right now or will be suffering shortly. Air travel is coming back, but it's coming back more slowly than any of us could hope for. But going ahead and giving special favors to that industry when we have sectors in many parts of the country, look at bars, restaurants, entertainment, travel in general. We have many sectors that are struggling. We cannot bail everyone out. But what you see here is you see airlines are armed with a number of very well-connected lobbyists, and they want special favors given to them to help them out in a time of need. That's not the way to go. Airline industry, they can go ahead and raise money on the equity market. They can raise money in the long-term debt markets. And if we're going to do anything, we should go ahead and use the tax code to provide them a capital infusion. What would that look like? Well, usually if you have a loss, you can roll that loss backwards. But we should go ahead and consider allowing them to apply this year's loss to past year's income or to prior year's income and give them an immediate, basically a retroactive tax refund. And what that would do would allow them to go ahead and build up their capital base because they are going through some tough times. But as they recover, it would ensure that taxpayers are compensated for those funds. Just handing them money in the form of a grant or a subsidized loan, that's not an appropriate way to go.
And tell me, is this an avenue that's even being discussed at the moment?
Some policymakers that are in favor of freer markets and that understand the risk of government getting involved with the private industry, they are discussing this. Unfortunately, it hasn't gained a lot of traction within the halls of Congress, but I'm hoping that with this show and with others that we can get the word out there that there are alternatives to these bailout measures.
And what would it mean for the taxpayer, say, for example, if we were to eliminate all of these type of bailouts or a lot of them?
Well, over the past several months, we have seen in excess of $4 trillion spent by way of either outright stimulus handed out to tens of millions of Americans, or the unemployment bonuses, or the Paycheck Protection Program. And now you have the Federal Reserve engaged in their own array of lending programs. The Federal Reserve has printed well in excess of $3 trillion that has been dispersed throughout the economy. So we have seen bailout upon bailout. And I think that there's a lot of good intentions here, but we have to realize that borrowing money, spending money, printing money, this has long-term economic consequences. What we need for a real economic recovery at this point, we need America to be able to safely reopen. And if you look at what's happened over the past few months, we've had 3 consecutive record jobs creation months, and that's not because of bailouts, it's not because of stimulus spending, it's because in many states and in many cities, businesses are actually being permitted to open their doors once again. And we're seeing that when businesses are permitted to open up the doors, people are quite willing to go back to work and to begin shopping. I've seen this in many cities across the country. I've visited family and friends over the past few months. And in many parts of the country, things are very quickly returning to normal. And I can only hope that happens here in Washington, D.C. and in places such as New York.
Very positive to hear. Joel, thanks so much for your insight.
Hey, thank you for having me.
Stocks surged today and pushed the S&P 500 to its 4th straight record closing high, driven by tech stocks, government stimulus, and record low interest rates. The Nasdaq also set an all-time closing high today. It's its 39th this year. What a strange year. Salesforce shares soared after a super earnings report. The Dow rose over 83 points, or 0.3%. S&P 500 gained over 35 points, or 1.02%. And the Nasdaq added over 198 points, or 1.73%. And White House economic advisor Larry Kudlow says the Trump administration is looking to introduce more tax cuts to spur investment and create jobs. This as America continues its rebound from its deep recession.
Larry Kudlow spoke on the second night of the Republican National Convention. He credited President Trump's economic policies with a record economic expansion and a record low unemployment rate before the pandemic.
Blue collars, African Americans, Hispanics, women, all groups benefited enormously. Everyone was better off. A rising tide lifted all boats.
Kudlow said the CCP virus outbreak cut the prosperity short. Lockdowns and business shutdowns decimated the labor market. But he said emergency spending and tax cuts helped bring the U.S. economy back from the brink. He says the nation's economic health is coming back.
Now, looking ahead, More tax cuts and regulatory rollback will be in store. Payroll tax cuts for higher wages, income tax cuts for the middle class, capital gains tax cuts for investment, productivity, and jobs.
Trump recently issued an executive order deferring payroll taxes, which he said he would seek to make permanent if re-elected. The president also said he'd like to see the capital gains tax slashed to 15%. His rival, Democrat nominee Joe Biden, has called for taxing long-term capital gains and qualified dividends at the same rate as income tax, so at 39.6% on income above $1 million. Kudlow also took a shot at Biden's plans to raise taxes on people making over $400,000 a year. According to the Tax Policy Center, it would increase tax revenue by $4 trillion over the next 10 years.
In economic terms, folks, this is no time for a $4 trillion tax hike. Coming out of the deep pandemic, who in their right mind would pick the pockets of taxpayers and drain money from their wallets and purses?
In economic terms, Kudlow framed the choice in November as being between pro-growth policies and prosperity and what he said would be a turn back to the dark days of stagnation, recession, and pessimism.
And then a positive note for the economy. The Commerce Department reports orders for durable goods jumped over 11% in July. It's mostly due to strong consumer demand for new cars and trucks. Durable goods are items that are meant to last over 3 years, like cars or washing machines. Orders have risen for the third month in a row and at a higher rate than expected. But if you don't include transportation, new orders increased a modest 2.4%. In other news, the U.S. Justice Department has charged pharmaceutical company Teva for price rigging on generic drugs. The drug company refused to strike a settlement that would admit criminal guilt but waive any financial penalty. Teva has vowed to vigorously defend itself in court.
American-Israeli pharmaceutical company Teva are alleged to have colluded with other drug makers to push up the prices of widely used generic drugs. Generic drugs account for 90% of all drugs dispensed in the U.S. Assistant Attorney General Makin Delrahim in a statement said it led to substantially higher prices for generic drugs relied on by millions of Americans. Teva says it firmly rejects the allegations and will vigorously defend the company in court. A person familiar with the matter said the indictment follows Teva's refusal to agree to a settlement that would have required paying a criminal penalty and admitting wrongdoing. According to Bloomberg, 5 other companies have settled charges and agreed to pay a total of over $420 million in criminal penalties. Teva says that it has attempted to reach a resolution with the Justice Department, but the agency has shown an unwillingness to consider alternatives to paying a criminal penalty. On a separate matter, Teva are facing charges around the fueling of the opioid epidemic in the U.S.
And then a look to the future. The U.S. government plans to invest over $1 billion in quantum computing and artificial intelligence over the next 5 years. It aims to keep the U.S. globally competitive in frontier technologies.
The White House is planning to invest over $1 billion over the next 5 years into quantum computing and artificial intelligence. The effort is designed to keep ahead of competing nations like China on the emerging technology. U.S. Chief Technology Officer Michael Kratzios said it's absolutely imperative the United States continues to lead the world in AI and quantum. We know our adversaries around the world are pursuing their own advances. The Department of Energy will supervise 5 new quantum research hubs. They'll be comprised of top research universities, other national labs, and big tech companies, such as IBM, Intel, Microsoft, and 2 quantum computer startups. Missing from the list are Google parent Alphabet and Honeywell International. The National Science Foundation and other agencies will invest in 7 AI institutes. They'll be hosted by universities across the country. According to the NSF director, at least 6 will be at minority-serving institutions, including historically black schools. The institutes will be a training ground for America's next generation of AI experts. A White House spokeswoman said the funding is already part of the participating agencies' budgets.
And still to come this evening, the U.S. sanctions 24 Chinese companies over the South China Sea. We talked to a China researcher to hear what he has to say about the news. And home goods retailer Bed Bath & Beyond is laying off nearly 3,000 workers. The company is restructuring and shifting towards digital. That and more after the break.
We are being censored. America's news outlets no longer provide the truth. 90% of news outlets in the United States are controlled by 6 corporations. They're not out to tell you the truth of what's happening. They're out to tell you the picture of the world that they represent. The mission of the Epoch Times is to chase the truth, to ground all statements in facts, and prevent people from being misled. The Epoch Times is independent. We're not controlled by any special interests, and we never will be. The Epoch Times is a non-partisan media. That means we don't stand for any political party. This is a battle between truth and deceit, a battle between forces that would ensnare this country in ignorance, and between a media that wants to present you with the truth. Subscribe today and join the Americans who are seeking truth and tradition. We'd love to have you on board.
The United States is sanctioning 24 Chinese companies and their executives. It's a belated response to the ongoing construction and military action in the disputed islands in the South China Sea. The move also places export restrictions on the companies. NTD's Patrick Hayden reports.
The United States has blacklisted 24 Chinese firms and executives involved in helping Beijing advance its territorial claims in the South China Sea. Daniel Wagner, CEO of Country Risk Solutions, says he's surprised it didn't happen sooner.
It really should come as no surprise to anyone that this type of action has occurred. Beijing has been illegally occupying the islands of the South China Sea for many years. And in spite of the Hague ruling in 2016, it continues to militarily occupy these islands.
Wagner says some would argue the US was a little negligent in allowing China to occupy the islands in the first place, and acting now might be a little too late.
It's important for the US to get involved because there is no other country that is willing to stand up to China from a military perspective. At this stage of the game, there really is no other country that would be prepared to do it, and the idea is that other allies of the United States would follow suit.
The State Department said it would impose visa restrictions on Chinese individuals responsible for or complicit in helping the Chinese military construct and militarize the islands. The sanctions restrict sales of US goods to be shipped to the blacklisted companies, along with some other items made abroad with US content or technology. Companies can apply for licenses to make the sales, but they must overcome a high bar for approval.
The head of a Chinese industry group says the country is likely to import at least $300 billion worth of semiconductor chips this year. Highlights that China's reliance on foreign technologies despite its efforts to boost local production.
Vice Chairman of the China Semiconductor Industry Association, Wei Xiaojun, says China will continue to import $300 billion worth of chips if nothing out of the ordinary happens. China is the world's largest importer of chips. According to an organizer video, Wei told the World Semiconductor Conference this would be the 3rd straight year of buying chips at a similar volume. China has been spending billions of dollars to improve its domestic chip industry, and it's now even more urgent as Washington puts fresh pressure on Chinese tech giant Huawei. Earlier this month, the Trump administration added about 40 Huawei affiliates to a blacklist, preventing U.S. companies from doing business with them. The move could choke Huawei's access to even off-the-shelf chips, further cutting it off from the global tech supply. One of the companies leading the effort to grow an independent chip industry in China is SMIC. It plans to sharply increase its capital spending, but faces challenges such as a lack of intellectual property.
And some Bed Bath & Beyond employees will soon be looking for somewhere else to work. The retailer says 2,800 job cuts are expected as part of an accelerated restructuring plan. Officials say the restructuring move could bring nearly $150 million in savings. Bed Bath & Beyond's president and CEO says the cuts are critical to rebuilding the foundation of the business. The company also plans to focus on improving its digital-first shopping environment. And Germany's ruling parties have agreed to spend billions more on virus relief. They're also freezing insolvency rules and extending a program that lets employers reduce employee hours.
Germany took further measures to protect its economy from this year's downturn on Tuesday. The country's coalition parties agreed to spend another 10 billion euros, or just under $12 billion. Germany contracted at its fastest rate on record in the second quarter, and with elections due in 2021, the government is eager to fight off the worst economic effects of the virus. Some key decisions include an extension of short-time work subsidies until the end of next year. They had been due to expire in March. Insolvency rules have been frozen, so struggling companies can delay filing for insolvency until the end of the year. A short-time work scheme will also be prolonged. Such schemes save jobs by allowing employers to reduce the employees' hours, but keeps them in work. Finance Minister Olaf Scholz said the goal is to stabilise the economy. Germany's government has already brought in a massive stimulus package worth more than 130 billion euros this year.
And still to come, homeowners looking to refinance will have to pay a new fee. But luckily, the starting date has been pushed back to December. Find out how much they'll have to pay after the break.
Violence, war, lies, famine, slaughter, tyranny. The devil's arrangements are present in both the East and the West. Turned religion, the family, politics, the economy, finance, military affairs, education, the academy, the arts, the media, entertainment, all into battlefields. Communist ideology is an ideology of the devil, the initiator of an unrestricted war on mankind. The question is, why are there so many people who harbor romantic fantasies about communism, help the devil spread its lies, even becoming its obedient tools, to deceive, co-opt, coerce, confuse, and so overturn traditional thought, subvert order, create upheaval, and to divide and conquer with the objective of gaining global control?
Record low mortgage rates have many people considering refinancing their homes, but those looking to refinance are likely to get hit with a new fee. Starting in December, Fannie Mae and Freddie Mac will be charging an adverse market fee. It adds 0.5% of the total loan amount. According to the Mortgage Bankers Association, that ends up being roughly $1,400 on average. The fee was initially set to take effect at the beginning of September. Yesterday, regulators pushed it back to December 1st. The Federal Housing Finance Agency says the fee is related to virus-related economic uncertainty, and it says it's needed to help pay for support given to homeowners through forbearance programs and foreclosure and eviction moratoriums. Loans with balances less than $125,000 will be exempt. And the hopes of Hollywood are riding on the opening of Tenet. The Christopher Nolan spy thriller is testing whether movie fans are ready to return to the cinemas and rescue an industry hammered by the pandemic.
I'm not saying Armageddon here.
No. Something what?
Warner Brothers' Tenet is a big-budget thriller from director Christopher Nolan. Its release has been delayed several times due to the global crisis, but it finally came out in 70 countries on Wednesday, including in the UK, where the studio will be looking very closely at the box office receipts. Film critic Kaleem Aftab.
Well, I've seen too much. Well, we'll try and keep up.
I think if Tenet is a success, we're going to see a quick rush of releases. We'll see Bond come out for sure in November. The worry is if Tenet's a flop, they'll decide to wait till next summer.
Of course, social distancing is the order of the day at your local cinema, whether you're buying your popcorn or watching the screen. But the general manager of London's Odeon Lux Leicester Square, Tessa Street, says she's confident moviegoers will return.
It's obviously vitally important that Tenet is successful and that we obviously deliver a great experience for our guests so that they want to come back. And we're really confident that that will be the case.
The movie will be released in the United States next week.
Looking forward to going back. That's the latest business updates for now. Thanks for tuning in. We'll see you tomorrow.